Welcome to the webinar. My name is Rob Booker, and I'm joined tonight by Justin Hertzberg of Forest Park FX. Hello, Justin.
Hey, Rob.
All right, so I want to start tonight's presentation off with a welcome to you. There's lots of friends and people that I'm so happy to see here, and I can see Mike is here, and Mario, and Lance K, and Cool Dip is here, and Krishna, and Jorge, and there's a lot. Rod H is here, and Rodrigo is here. So welcome to you all. I'm so happy. I see your names, and I'm always, I got a smile on my face every time I start these webinars because it's like my favorite thing to do. I want to begin the presentation tonight with a reminder that trading any financial instrument inherently involves a substantial amount of risk. And we all know about the risk associated with drawdown and the risk associated with margin calls. We know that, and we've been taught that a million times before. And what we don't talk enough about is that trading is also a risk that we take with the broker that we choose. And I want to explain to you exactly how it is that I see a broker and a trader. So here's me trading on my computer, okay? So I'm just going to draw right on my charts. That's me, and I've got all this hair up here, and I've got like a fuzzy beard and this really like giant nose, and then I got one really huge eyebrow. Okay, that's me, and I'm having a great time, and I'm trading and whatever else. My trades go into my computer. So here I am. There's my little Apple. There's my little Apple computer. That's the best I could do. And then they go to the broker. And what we imagine happens at the broker. And this is what the not what the broker sells to us, but sometimes that is what happens. But here's what we imagine happens at the broker. What we imagine the broker does is there's Jane over here, and Jane has huge feet, by the way. She was born that way. Don't make fun of her. And what we imagine is that the broker is just combining Jane and I together in this relationship of like the broker is a straight through processor and is connecting Jane and I, and there's no intervention by the broker whatsoever, and nothing is going on. And now what you would hear if this were a movie is that it'd sound like a record was screeching, like, and we would stop and we would say, but this isn't the full story. Some brokers underneath the surface, and they're not being dishonest about it. I'm not calling brokers dishonest, but some brokers underneath the surface have other lines of business. And in these other lines of business, they have a warehouse. And inside of that warehouse, if I'm a small trader, they might actually warehouse my trades, even though they call themselves a straight-through processor or whatever else. I'm not mentioning any broker specifically, but I'm telling you that brokers sometimes warehouse trades. Other times, Jane isn't part of the picture at all, actually. And on the other side of the broker is a bank. And that's where your trade goes, and the bank is warehousing the trades. Whenever a bank or a broker is warehousing your trades, what they are doing is they have a book of business, and this is like a book. And these are the pages of the book with all the trades in it. And the broker is holding your trades, or the bank is holding your trades inside of a warehouse, which is just a computer, but they are accumulating lots of trades, and they are holding those trades on the books. And some of those trades are negative for them and positive for you, and some of those trades are positive for them and negative for you. And this whole conversation about straight through processing or no dealing desk leading to a situation where you can't be stopped out of a trade, or there's no stop hunting or all that business, is irrelevant, because even if a broker straight through processes your trade, it's not going to Jane. It's going to a bank that's agreeing to be on the other side. So it's straight through processing to a bank where your trade is warehoused. And along the lines somewhere, there's going to be 10 million, 15 million, or some other millions of dollars of trades warehoused. And that bank is going to have to do something with those trades. And they have purchasing power, not to necessarily move price, but they can do a little bit of that. So I want you to understand that there's a lot more than meets the eye. And when a broker blows up into flames, explodes into flames, this warehousing of trades has a lot to do with it. That has a lot to do with it. Sometimes there are all kinds of other considerations that go into a broker exploding, like the broker doesn't have enough money on the books, or the broker owes, I don't know, Rigoletto from Daredevil owes Rigoletto like a bunch of money, or whatever. I don't know what's going on, but there are all kinds of risks associated with brokers. And we don't often think about the risks, and we don't often consider whether or not we're trading at the right place based on our account size and risk profile. Let me share with you two more stories. One is just a fun story, and one is a story about the way the brokerage business works. The first is the fun story. Once upon a time, there was a man who wore a suit to work every day. Here he is. And he is a real person. This is a real story, and it's not me. He's a real person, and he's got a briefcase, and he's carrying the briefcase to work every day. And he walks to work every day at a big broker. I'm not going to tell you who they are, and I'm not even going to tell you if they are still in existence today. He walked to work every day at this big broker. And this man was the dealing desk manager at this broker. And this man, as part of his job at the broker, would watch all the trades come into the system from all the little traders all over the world. And back in 2008, this dealing desk manager was just like those people profiled in Michael Lewis's book, The Big Short. He knew that something was amiss with the U.S. housing market, and so he began to hold British pound, Japanese yen sell trades on the books. And as you know, over the course of 2008, this is what happened to the British pound, Japanese yen. It went up and up and up. And over here, he was down $1 million. And over here, he was down $2 million. And over here, he was down $3 million. Until finally one day, he was down over $15 million as the dealing desk manager at this broker. Now, he was confident in his idea that something was amiss in the financial markets, and eventually these trades would pay off. He was holding British pound, Japanese yen sell trades, while traders from this broker were holding British pound, Japanese yen buy trades. And he was convinced that eventually the British pound, Japanese yen would fall, he would make a lot of money for the broker, everyone would be happy, and everything would be sweet and wonderful all over again. Here's what happened to this dealing desk manager. One day, the dealing desk manager's big boss, I'm going to make him wear a hat because he's the boss, and he was cross. He had very angry eyes and a stern look on his face, and he said, "No more. We cannot handle your $15 million loss. You need to liquidate that position." 2 weeks later, the British pound, Japanese yen fell 20,000 pips in the financial crisis, making that trade that no longer existed worth $100 million or more dollars. And none of this ever got to happen for this fine man who wore a suit and tie and took a briefcase to work every day. He missed out on a $100 million trade. Sometimes we are prone to think that brokers are smarter than us, or that brokers know more than we do, or that we are destined for failure and brokers have all the information. But the dirty little secret is brokers don't know everything and don't always manage their own positions well. In fact, they sometimes let a loss run too far, or don't consider the big picture, or don't really have adequate protections in place. And you and I, as traders with real accounts, need to be cognizant of this. And we need to be aware that we don't know the full story. And we need to work with people that can help enlighten us about our situation if we can't be an expert. The last story that I'm going to tell you is another story, and it's just about me. Here I am. I'm wearing swim trunks today because I live in Arizona. And here's my swim trunks, and I'm trading on my computer. And ordinarily, I put a trade into my computer, and that trade goes to the broker. The broker has maybe a 2 pip spread, and the broker makes this spread. That's the profit for the broker. Does everybody understand that? That's how a broker works. So does everybody understand how that that works? That the broker's going to get paid from that spread, and maybe they're going to get paid for warehousing trades, but the majority of brokers now have moved to a model where the majority of their money is going to come from volume and from processing a lot of trades. And the broker's going to make that money. Now the broker, what does the broker want? The broker wants what? What does the broker want? It starts with a V, Justin.
Volume.
Volume. The broker wants volume. The more trades get into the system, the happier the broker is. The broker wants volume. Lots of trades, lots of pip spreads, and lots of trades running through the platform. And the broker is often willing to pay someone like Justin a part of that spread in order to go out and find more people to trade and put trades in the system. And Justin makes a little bit of that spread. It doesn't change the spread at the broker, and in some cases, Justin can even lower that spread. But here's the amazing thing that we're going to talk about tonight. Justin gives a significant portion, in some cases, of that spread back to the trader who made the trade. Justin's like a Marvel superhero in that sense. He's like stealing from the rich and giving to the poor, although it's not illegal or anything, and it's totally above board. It's amazing. What most people like Justin do is they sit on a beach somewhere and they don't care about you. They don't care if you get a higher spread, in fact. But Justin negotiates for a better spread and then gives you part of that spread back. But not only that, Justin also only works with brokers that Justin trusts and visits and verifies and knows. So if something goes wrong or hits the fan, Justin mitigates that risk. So Justin gets paid, you get paid, and the broker gets more volume. And that's the story that we're here to tell you tonight. And without further introduction, I want to hand over the presentation to my friend and colleague, Justin Hertzberg of Forest Park FX. Thank you for being here, Justin.
Thanks, Rob. That was a much more animated description of what we do than I'm probably going to give everyone else, but that was enjoyable. I'll do my best not to let everyone down. You're a tough act to follow.
No, if you're giving us money, there's no letdown. There's no way you can let us down.
Just before I even get into the actual PowerPoint, so I had lunch today with the principal of a very large and growing Australian broker today, and we got to talking about all the things that they're doing and what we're doing together, and I started to ask. I said, all I see when I offer, clients to go to your website is that you have one sort of like retail pricing feed, which is, kind of wide spreads. We're able to offer a pretty decent rebate. And I said, but do you offer any sort of like raw spread with commission? Because a lot of Australian brokers do. And he says, yeah, we do. We just really don't make it part of the offering with our introducing brokers because they never seem to want to offer it. They want to only offer to their clients the price feed that makes them more money. And I was like, well, I guess I am not part of that group. I was like, because I want to give my clients the best price that we can give them. But it just made me laugh because I like to think that we're different. But sometimes someone tells me a story like that, and then I go, yeah, we're definitely different. Because it seems like other introducing brokers don't even care about getting their clients the best price. And that's like the first question I ask is, what are all the feeds? What can I get my high volume clients? What can I leverage to improve their pricing? So I just thought that was amusing. It
that is
dovetailed in nicely to your little story there. I guess I'm the FX Robin Hood. I like that. Yeah.
It all came to mind because I finished watching Netflix's Daredevil series today, and I keep thinking about this hero that sort of puts himself at a disadvantage initially in order to do good for other people. And I know that's a really, really, really That's a far stretched analogy because you're not running around in a suit with a cape or anything, Justin. But in this business, what you're doing is not just rare; it's practically unheard of. So I really appreciate that about you. All right.
I thank you, and yeah, happy. Always happy to talk to your group. It's a great group, and hopefully I'll get a chance to meet many of them out in Phoenix in a couple weeks. And just looking at the list of attendees, most of the names I don't recognize, so that's good. Even though we've done this webinar before, looks like some people might be seeing it for the first time, which is great. And as always, I love to keep it informal, so stop me anytime. Please ask anyone who's listening, if you have a question in the middle, just type it in quickly. We'll stop, we'll discuss it, we'll go off on tangents, because at the end of the day, I want you to get value, and if you've got some pressing questions, I want to answer them. So don't hesitate to interrupt. But in any event, my name is Justin Hertzberg, like Rob said. I'm the founder and CEO of Forest Park FX. We are a CFTC registered NFA member, independent introducing brokerage firm. You'll see there's my name and my company. So we've gone through some hurdles, and part of being a registered company means doing things right, and we endeavor to always remain compliant. But at the same time, we're very, very good at getting the most out of the box we're in. So right now we're in a challenging time with the industry and changing regulations and in a post-Swiss National Bank world. And we're all sort of painted into a box or a corner, and we specialize really in helping clients get the most out of their brokerage relationship, getting the most protection for their funds, getting the right feeds for their trading, getting the right pricing model or execution model or technology or platform that their strategy needs. Don't want you to jump ahead too far up. Just if you could flip back to the risk disclaimer, I just want to just make brief mention. As a registered firm, we are required to put up this risk disclaimer, but even if we weren't required, we would put it up anyway. It is important for everyone to know that this is a tough industry. Trading is difficult. There are risks involved. As we have seen with in recent months, not only can you lose all the funds in your account, you can lose more than the funds in your account. So it's important to understand those risks. I don't want to belabor that point, but we're not in the business of selling dreams. Rob is not in the business of selling dreams. We're just trying to educate, empower, and give everyone the tools that they can use to ascend their own learning curve and improve as traders. So just want to get that part out of the way. You can flip forward, Rob, if you want. Just a brief background on me. I obtained a philosophy degree from Emory, what seems like a really long time ago now. My usual joke is that none of the big philosophy companies came to recruit me upon graduation, so I did what any philosophy major does, other than going and working as a barista, is I went to law school and graduated with a JD MBA with a concentration in finance from the University of Miami, and started my career very far away from trading as a securities and commercial litigator for a large Florida firm. And I did that for a little while, realized I was way too entrepreneurial for sort of a stuffy old profession, and looked for an escape. And in early 2009, I had an opportunity to move to another large Florida firm or go and work for a former FX fund manager who at his peak had $750 million under management. And the latter sounded way more sexy than the former. So I took a shot and left traditional practice and worked on a prop trading floor and learned the markets, grew into a business development role. I then went to work for a boutique broker-dealer specializing in order routing and execution, which to most people means absolutely nothing. To me, it was beyond fascinating because it had everything to do with what happens after you click buy or sell. Whether you're trading stocks or FX, you click a button and you think, oh, I'm going to get an order, I'm going to get a trade done. Well, that trade has to match up with someone else somewhere. And my former firm specialized in that, and we got to see all the inner workings and the whole industry behind order routing and how your trades actually get executed. And it was great experience, and it was something I felt I needed before I launched Forest Park in 2013. And when I had enough experience and capital, started the company, and been fortunate enough that my path crossed with Rob in 2013 also, and we've been working and building a relationship since to just continue to add value to FX traders worldwide. So that's a brief bit about me. On the next slide, Rob, is just a little bit about Forest Park and kind of what we do. I like to consider us a solutions firm. Our primary focus is reducing trading costs through cashback rebates and negotiating better spreads and commissions with the brokers where we introduce clients. We also try to connect traders with the broker, the platform, the pricing model, the technology, the execution model, the rebate structure, everything that best suits their trading strategy, because we have built this company to align ourselves with our traders. We work with all the brokers out there, or many of the brokers out there, but we represent the trader. And my goal, like Rob's goal, is to make everyone as profitable as I possibly can by giving them the best tools, the best guidance, leveraging my experience, relationships, other business dealings with these brokers to get the best possible deal for them. Our relationship doesn't end when we introduce a client to a broker. It's a continuing relationship. And we are your first line of defense. We are your advocate when something goes wrong. If you have an issue with a deposit, a withdrawal, a platform issue, a trade execution, a bad fill, something. It doesn't happen often, but when you have those issues, call us. Don't waste your time talking to the 24-year-old customer service guy who's just started and doesn't know what you're asking him. Call us. We'll get your issue taken to the right person at the broker so you can get a quick resolution. And we'll fight for you. So if especially on a trade where you think you were wronged in some way, we represent you. We don't represent the broker, and we'll do everything we can to get that resolved favorably for you. And lastly, just sort of the overarching theme to what we do is we want to position traders to make better brokerage decisions. One of the underlying assumptions behind my business, and I think, Rob, you would agree, is that a lot of people think all brokers are the same, that they're like a commodity, like buying a barrel of oil from John is the same as a barrel of oil from Jimmy.
Right.
Our assumption is every broker is different, and unless you understand those differences, you could be making a poor choice. And in a market and in an environment where the difference between success and failure is razor thin, those differences can literally make the difference between being profitable and not being profitable. And so we've made it our business to understand the differences and to use that to educate and empower our clients to make better decisions. So that's a little bit about what we do. But obviously, not everyone is here to hear about what we do. They're here to hear about how we can help them. So on the next slide, Rob, if you just flip forward, we're going to talk about why we're here today. And as everyone on this call knows, Rob spends countless hours in a million webinars and seminars and strategies and methodologies and teaching and educating. He does all of this to add value, to help you better understand the markets and develop as traders. And if I were to sort of summarize all of Rob's efforts, his goal is to help you make money in the market. Well, our goal is a little bit different. Our goal is to help you save more money in the market. And what we do and what Rob does is symbiotic. It's complementary. Each of us on our own adds value. Putting what Rob offers in terms of value with our guidance in terms of brokerage is a much more powerful package. And the ways that we can help you save money in your trading primarily comes from cashback rebates. Although with many brokers that we work with, we can leverage our relationships with them to negotiate custom feeds, custom commission structures that create a better environment for you to trade. It typically takes a special client with perhaps a large deposit or high volume to get a complete custom solution, but everyone will receive a cashback rebate. And we're going to talk about what that means and what a cashback rebate is, but in short, it's free money. We are literally being compensated by the broker for introducing your business and then turning around and giving you the lion's share of that compensation in the vast majority of cases. So Rob, if you want to flip forward, we can kind of get into what rebates are, and maybe we'll pause after I kind of run through this and see if there's any questions that come in. But what are cashback rebates? As I mentioned, we are an IB to many of the world's top brokers, and we're compensated by introducing clients to those brokers. And it's in this sort of structure where many IBs either take advantage of their clients or just simply add no value. Because if I have a relationship with John and I introduce John to FXCM, FXCM is going to pay me in perpetuity for as long as John continues to trade with them. I have no obligation to John really at that point in time. I don't have to do anything else, and FXCM is still going to pay me. That's just how it works. And in some cases, introducing brokers will actually mark up John's costs because maybe John won't know. Maybe he won't realize that if he opened his account directly with FXCM, he'd have lower spreads or lower commissions. But many of them just act as what I'll call mere pass-throughs. They introduce John's business to FXCM. FXCM pays them until the end of time for that introduction, and that's the extent of it. So what did John really get? John could have gone to FXCM and gotten the same service. Our business model is very different from those other IBs. Our goal, like I said, is to make trading cheaper for you, to help you save money and extend, or I should say, ascend your own learning curve. And we don't force you to trade with any one broker. We are broker agnostic. Going back to the very beginning, our job is to help you find the right broker for your particular trading strategy. And I can see here, I mean, we have tons of people on this webinar. I'm guessing probably 25% of you are very skeptical as to what I'm discussing, that I'm literally going to give you free money, that there must be some catch, there must be some strings attached, there must be a hidden cost. There isn't. We do not mark up your spreads. We do not mark up your commissions. We are delivering the same pricing, the same execution quality, the same experience that you would get with the broker of your choice, and we will help you to trade with that broker cheaper. So there is probably no one on this webinar, unless they're an existing client, that can't benefit from what we're offering.
And that goes even for those of you that already have a trading account at a broker that Justin works with. And we'll show you a list of brokers in just a moment. In most cases, even if you already have an account at that broker, Justin can still help you. And you might be wondering, why is Rob doing this? Like, what's the catch? And the catch is, I mean, the catch is I love traders, and Justin has helped hundreds of TFL 365 members in the last 3 or 4 months, just a ton of people. And there is no catch. This is what I do. So even if you already have an account at one of the brokers that we talk about in a moment, you can still reach out to Justin. He can still help you. In most cases, it's a very simple process. Justin, back to you.
Yeah, that's exactly right. And I want to go through the infographic here on the right, and I'm begging my web developers to update it because it reflects the old FXCM pricing model, but it demonstrates really clearly how the rebate process works.
All right.
And
So yeah, I'll zoom in a little bit on this.
yeah, if you can, that would be
Yeah.
terrific because
I'll
I
just,
want everyone to be able to read it while we kind of go through.
okay. So
I
I'm
think
gonna try
that's
to make this a little bit larger and pull some of this other stuff off the screen here
Can you
and
just pull down at the bottom where it says click to add notes just a touch?
yeah.
Uh, now we're too big.
I think we'll actually
Well, we can scroll down too.
yeah.
So let's go through the left column first. And the left column is your typical Forex account, which most of you on this webinar have, meaning that you went directly to FXCM, Forex.com, Oanda, somewhere, and you opened up an account through their website. So in this particular example, you go to FXCM.com and you open an account. You choose maybe the trading station platform or the MT4 platform, and you fund your account with $5,000. And you start to trade on the euro. Now, at the time we did this infographic, it was before they went to the raw pricing model, so forgive the inaccuracy of the amount here. But their euro spread at FXCM in October used to be 2.5 pips wide, if you can believe it. And let's assume, for example, that on your average trade, you traded 2 standard lots of the euro dollar, and you placed 10 trades a day. So pretty high volume for a $5,000 account, but it's just good to demonstrate this. And Rob, if you can just scroll down just a touch.
Yeah, of course.
Okay, so here we see just sort of the hypothetical trading volume just beneath that red arrow. Perfect. So let's just assume in your account you traded 2 standard lots on every trade of the euro, and you placed 10 trades a day. And let's say at the end of the month your trading profits were $750, and so you have in your equity in your account is the $5,000 you started with plus the $750 you made in trading profits. So because you opened this account directly with FXCM, you got $0 on every trade, $0 per day, $0 per month, and at the end of the month you have the same $5,750 in your account. Now let's look at the scenario, Rob, if you can flip back to the top.
Yeah, of course.
And we'll talk about the exact same process, the only difference being that you open your FXCM account through Forest Park FX.
Or you work with Justin to get organized on whatever account you have.
Or whatever broker, sure. But
Exactly.
we'll stick with this example. But
Yeah.
let's say you want to work with FXCM. We decide that's the right broker. You come to our website or you work through me, and I'll provide you with the appropriate affiliate link to open your account. It's just a link to go to FXCM that's sort of branded or tagged with our affiliate code. And you go to FXCM's website, you open an account with FXCM, you choose your platform, you fund your account with the same $5,000, and you're going to see the exact same euro-dollar spreads of 2.5 pips. You place the exact same trades, you get the exact same executions, and at the end of the month, you're going to have the exact same P&L. You're going to make $750 for the month, and your account equity at the end of the month is going to be $5,750. Now, at the time that we did this infographic, the rebate that we offered with FXCM was 0.7 of a pip on every trade. And if you traded 2 lots on every trade, you would get back $14 on every trade from us, which would equate to $140 a day, which would equate to $2,940 per month. And after rebates are deposited directly back into your trading account, your equity at month end would be almost $8,700 as compared to $5,700.
Yeah, and even if it's $100, imagine that it's in a lot of cases it's deposited right back into your trading account. There's nothing you have to do, and you're going to take the same trades you were already taking, and in some cases, if you trade a lot of volume, that can add up substantially.
Yeah, this is just free money. You are already taking those trades. You would take those trades before you ever met me.
Yeah, and somebody's
And
already making that money. It might as well be you.
correct.
Like somebody is already getting that money.
Yeah, just think that $2,900 was going to FXCM. Now it can go to you. This is just one of the ways that we can help clients ascend their own learning curve to develop as traders. This is a hard business. Every dollar counts. A lot of new traders uh, lose money in the beginning because it's hard, because they haven't developed a strategy, a methodology, a discipline.
Yeah,
This is a way to
right.
stem the tide. This is a way to make those lean months a little bit more bearable. This is a way to make those profitable months that much better.
Exactly. And
Uh,
I want to make sure you understand, and we're going to get to this slide in just a moment. You're not opening a trading account with Justin. Justin is not a broker. So we're not here. Justin is not taking possession of your funds. You're not trading with Forest Park FX. You are trading with the same broker you always were, on the same platforms you always were, in the same way that you always were. There's no difference. Justin is simply catching essentially catching part of that spread and throwing it back to you every time you take a trade, instead of it just getting wasted away. So you're still with the same broker. So Doriel asked, are the trades visible to your broker? Yes, of course, because you're still trading with the same broker you always were. You're not trading with Justin, and Justin's not, like Justin's not rifling through your trading account or anything like that. There's nothing like that going on. Justin is simply, he has set up a business model that has been around since brokers existed. Justin gets compensated in order to direct new traders to a broker. Then Justin passes on most of that compensation, in most cases, to you, instead of just running away with it like essentially every other introducing broker ever did. But you're still trading with the same broker you were, on the same platform you were. You're still wiring your funds to your broker in the same way. You're still downloading the same platforms. You're still seeing the same spreads, or in some cases, you're going to get better spreads. So that's what's happening here, and it's almost impossible for someone to imagine that very little changes and suddenly now you're getting compensated for your trading. But it's because this is all in the dark. Like, this isn't something that people talk about. And in the background, that spread is going somewhere. The spread that you see on your screen, the bid and the ask, that difference is getting paid to someone somewhere. And it might as well be you. And it's shockingly fantastic that it can be you. So let's not zoom out anymore on this slide presentation and go back to where we were before.
yeah, no, and Rob, you've made some of the points that I want to make too. That we don't take client funds. We don't clear your trades. You don't trade on some other platform. You trade with the broker you want, with the broker that's the best fit. You trade on their platform, on their technology, with their pricing, their spreads, everything. When you have a question, if you don't want to talk to me, you can call up the broker. They have your account. They know who you are. They will answer your questions. This is just a way to get a little bit of that, or in some cases a lot of that spread that you're already paying away back. And trading with lower costs of trading beats trading with higher costs of trading any day of the week. So yeah, that's a great point, Rob. Here's some of the next questions, the obvious ones. Yeah, it sounds great that you're going to give me rebates. How do I get paid? Fair enough. With some brokers, we are able to deposit the funds directly back into your trading account. The two obvious ones that jump out for that are FXCM and Forex.com, whether it's FXCM US, Canada, UK, markets, or Forex.com, Canada, US, UK. We can deposit the funds directly back into your trading account. With other brokers, some don't allow us that flexibility. We send out payments by check, PayPal, or wire transfer. More importantly than how we send the funds out is how quickly we do it. I've heard some horror stories from other brokers that have been in the rebate space from time to time, and I've heard you could take 45 days to get your money. There's absolutely no conceivable reason why it should take you 45 days to get your own rebates back. I don't like anyone chasing me for anything, and so we typically send out rebates within 3 business days after month end. I want your money back in your account so you can use it for whatever you need, whether it's to continue trading, whether it's to subsidize your mortgage or pay for your TFL subscription. That's your money. I have no business holding it. I want to get it back to you as quickly as possible and let you put it to whatever use you want. I don't know if there's
and you're getting paid those rebates whether your trades are positive or negative, wins or losses. There's a dirty little lie circulating around the internet that you only get paid these rebates if your trades are losers. That's not true. That has nothing to do with it.
No, this is definitely not that.
There's no
this
cap.
Is purely on volume.
Yeah.
You could win on every trade or lose on every trade. Your rebates are going to be exactly the same.
And there's another lie going around that there's a maximum amount that you can make, and that's not true either.
No, that is not true. I can tell you, the best day I had in my business was almost by accident. I introduced a client, and they did come in and they did deposit a lot of money, more than I expected them to deposit, and I didn't really know much about how they planned on trading. They were very protective of that, partly because they knew about our business and our model, and they wanted to work with us, but they didn't necessarily want to share more than they had to. And I woke up one morning, went into the office, and checked my back office account at Forex.com to see what kind of volume our clients had done overnight. And I had made about $7,000 in commissions, and the rebates for my client were about $14,000 that day. By the time I woke up and got to my office at 8 a.m., I was giggling. I had no idea how to explain what just happened. But we paid out rebates to that client that month of about $19,000.
Wow.
I mean, it was a massive amount of money, and we have many clients. I would say, without looking at the numbers, my guess is we probably have 100 clients or so that receive at least $100 in rebates a month. So it gives you an idea of how much money we're sending out every month. And some of those clients are thousands of dollars. Some of them are multiple thousands of dollars every month. And that's money that they were otherwise leaving on the table. So it's good for them. It's good for us. It's the win-win scenario that I like to create whenever I get involved in a project. I'm just not one of those people, and there's a lot of them in the finance industry that like to make money by getting over on someone else or doing it at their expense. That is not my game. I create win-win scenarios where we have aligned interests, and that makes me accountable to you and forces me to do a good job and do the right thing. So we've done a good job of that, and the business has grown rapidly, thankfully, and I'm confident that we can help just about everyone on this webinar. And Rob, if you want to flip forward, we can actually talk about some of the brokers we work with, some of the rebates we offer, and I'll tell you some interesting stories and feedback about some of these. Forex.com, probably one of the most well-known brokers in the world. We offer a half a pip rebate. So to put that into context, their average euro spread is about 1.7 pips. If you open your same Forex.com account through us, your euro spread is going to be 1.7 pips. But because of our cashback rebate, the net cost of you trading the euro is actually going to be 1.2. It's just that simple. So they're the broker right now where we have the most rebate that we can offer, and it gives you an idea of how much fat there is in the spread, how much profit there is for these brokers. If they can offer a 1 pip spread and they can give to me 3/4 of a pip in commission, I mean, that's how it is with Forex.com. We get 3/4 of a pip, half a pip we pay back to the client. So they're making money really on just 1 pip, and what they're charging most of their clients, that extra 0.7 of a pip, is pure additional profit for them. And most of that can go back to you if you just open through us. So that's what we do with Forex.com. FXCM has a slightly different pricing model since October. It is a raw spread plus commission model, and we pay back 25% of the commissions we receive from them. What does that equate to exactly? It's 1/8 of your commissions. So if you're familiar with FXCM, they charge you $8 per round turn per standard lot on major pairs and $12 on minor pairs. It will save you $1 per lot on your major pairs. It'll save you $1.50 per lot on your minor pairs. So it's not as large, but again, their pricing is so reduced. It's so it's the best in the U.S. far and away. So there's really not as much fat there as there is, say, with Forex.com. But the savings can still add up, basically saving you 1/10 of a pip on every trade. Oanda, good little side story. Oanda never worked with introducing brokers. And in 2013, I convinced them to try. We were the only introducing broker for Oanda worldwide. I'm pretty proud of that fact. For about a year, we were the only one. And we proved the model for them, and they actually started to bring on some other introducing brokers. With them, they've got very good pricing, and we offer a 0.2 of a pip rebate. So your euro spread can go from about 1.3 to 1.1. CityFX Pro, sort of a totally different animal than the rest. CityFX Pro is an affiliate of Citibank, and as such, it falls under banking regulation, which is governed by the OCC. Some of the benefits with Citi are FDIC insurance on your unused funds, no FIFO restrictions, no hedging restrictions. That's the good stuff. The bad stuff is apparently Citi is not taking any new clients right now. I'm not sure why. There was a story that came out at the end of last week that they might be selling their business, but unfortunately they're not a viable option right now. It doesn't seem. I can tell you they are a terrific broker, though. If something is to change and they start accepting new clients again, I traded with them since, I think, 2010. Just terrific pricing, execution, really good place to be. MB Trading has a unique model. For those that have worked with them, they have what they call an EXN. It's sort of like an ECN, although not quite as good. They can offer very low prices. They really aren't set up for introducing brokers, and so our commission is not as large as it is with some other brokers on this list, but we do still pay the lion's share of what we receive out to the client. And TradeStation is an interesting one. We used to be an introducing broker for IBFX, which was more or less the parent company for MT4 and TradeStation. IBFX sold its MT4 business to FXCM and spun TradeStation out into its own standalone broker. I fought and clawed, and I think I am the only TradeStation introducing broker in the world. I can't confirm that, but I'm pretty sure I am. So if anyone is interested in working with TradeStation, we are definitely going to give you the best deal out there. And Rob, I know you work with Scott Welsh, and a lot of people are really interested in his robots that he's developed on TradeStation. Strongly encourage you, if you're interested, to contact us about opening your account. That way you can gain access to his robots, but you can do so in the most cost-effective way possible from a brokerage perspective. Yeah, that's awesome. If you have, some of you are asking me the same question like 30 times. And I can't answer some of your questions specifically because they're very unique. And I want to make sure everybody here knows I'm posting Justin's email in the chat box on the right-hand side of your screen right now in the webinar. Justin's email is going in there. If you're watching the recording, I'm just going to put it up on the screen right now. So if you're watching this recording and you already know you want to work with Justin, pause the video here
and grab that email address. Justin is amazing at getting back to people. He is extraordinarily helpful. And I want you, if you have a question, don't ask it 25 times in this presentation. Talk to Justin, because you're asking a specific question about your specific situation, and this webinar has a lot of people on it. So let's definitely feel comfortable. Justin loves to hear from you. I'm posting his email in the chat box on the webinar. And Justin, we're getting a lot of questions from traders about non-US brokers. So here's the list.
Sure. And just so you know, I have two companies. I have my NFA registered company, and that deals exclusively with U.S. brokers and is geared towards our U.S. clients. I do have a separate company. It functions exactly the same way from an operational standpoint, and that is geared towards working exclusively with non-U.S. brokers and non-U.S. clients. And where possible, we introduce our non-U.S. clients to non-U.S. brokers for several reasons, and I'll list them quickly. You're going to get higher leverage. You're not going to have hedging restrictions. You're not going to have FIFO restrictions. You are going to likely be with a broker that offers, at a minimum, segregated accounts, so you have protection in the event of broker insolvency. And many of our brokers also offer or are within a regulatory regime where the regulator actually provides insurance on deposits in the event of fraud and insolvency, and there's simply no money to pay you back. So we put an emphasis on security of funds and trying to put clients in a position with a globally recognized, heavily regulated broker that offers a lot of protections for the client, but still being very pro-business, very pro-trading. And so this is the list where you see Forex.com and FXCM. With Forex.com, that includes Forex.com UK and Canada. With FXCM, it includes UK, Canada, Australia, and Markets, which is their unregulated affiliate. Also with Oanda, we work with Oanda UK and Oanda Australia. And TradeStation is for their Australia and their UK affiliates. So you see a lot of the same names here, and that's because we like to work with what we consider to be the biggest and best and most well-capitalized firms, the ones that have the fairest dealing situations. Because, frankly, I don't want to introduce a client to a broker that's going to disappear one night with your money. That's one of the things that keeps me up at night, is the concept of guilt by association. If that broker picks up and leaves with your money, I don't get a cent of that money, but you're going to hate me right along with that broker. And I don't want to run into that situation. So we spend a lot of time vetting the brokers that we work with. Looking at this list, I can tell you that I have had lunch with one of the principals of DirectFX. I had that today. I've been to Forex.com's office in both New Jersey and in London. I've been to FXCM's office. I am on a regular calling basis with the managing director of FXDD. I have had lunch with the CEO of Gallant. GFT is an affiliate of Gain, so they kind of fall in that group. I have been to the ILQ offices and know those people very well. I have met many of the C-level people at Oanda. And the other ones at the bottom I don't know as well, but I can tell you we've established a really nice working relationship with them over the last couple of years. TradeStation is actually located only about 35 minutes from where I live, and I just haven't been to their offices yet. But you know, there are 400, 500 MT4 brokers out there, and to be honest, most of them are crap. I really don't want to deal with brokers based out of Seychelles or Mauritius. You know, this is serious business, and your money is serious money. So I don't like to take any liberties and be cavalier with, hey, try this broker for X reason or Y reason. I'm pretty confident I can get you pretty much the best pricing you're going to find in as safe an environment as you're going to find. And you'll also get the benefit of our rebates, and you get the benefit of our leverage and relationship with that broker. Because if John Smith has an issue with DirectFX, he's just John Smith. He's going to call up. That broker's based in Australia. He's based in Spain, and they're not going to care. They're not necessarily going to do the right thing. But if John is a client of mine and John calls me up and says, "Hey, I've got a problem with my account at DirectFX," well, we have a lot of clients at DirectFX, and my business is important to them, and they don't want to rub me the wrong way. And we can get the right person to listen to what's going on, to understand that there's a bigger business decision at play here, and that's what we do. Going back to the very beginning, we're an advocate. We represent the client, not the broker. If there's a difference of opinion, I'm not siding with Forex.com. I'm siding with you. Doesn't mean that we're going to win the day in the argument, but we're certainly going to fight the fight. And that's not something that's easy to quantify. And I know we're all looking in a quantifiable dollars and cents type business, but it's something we do, and we do it. We'll be happy to do it for you as well. So anyway, I know we're running out of time, and Rob, I'm sorry to run over.
No big deal. We're so happy that you're here, and I know. Has everybody had a good time? I mean, everybody's still here. That got here at the beginning is still here. So, has this been helpful to everybody? I mean, it certainly has been helpful to me, and I love listening to this because it's such a unique approach. And for anybody that didn't know that this existed before, it just opens their eyes, and everybody's like, "Wow, that's super amazing." So yeah, everybody's like saying it's refreshing, and Ed says yes, and Vaughn says this has been great, and Jorge says yeah. Justin, how would you like people to reach you with questions about this or to get started?
Okay, so my contact information is there. Rob, you kind of mentioned it. I'm super responsive. I run my business like it's your business. So if something is important to you, it's important to me. My direct dial line is there. My Skype name is there. My email is there. I will also, if you want to type in my cell phone number, Rob, you can put that in. I'm not shy to give it out. 404 664 3057. That is the same number my wife texts me on to go pick up something from the supermarket. So I'm not one of those people who shies away. We're not a company where you just get like a contact us form and no one gets back to you and there's no face or name or person to associate. I'm very reachable. I'm very real. I will answer your calls. I will help you get started, whether you have a $2,000 account or a $200,000 account. Like Rob, our job is to help you develop, and we want to work with you. And I strongly encourage everyone to contact me because for the vast majority of everyone listening, we can definitely offer you a way to save on your trading. And I want to do that. It's a win-win situation, and it's free money. Go and get it.
That's so awesome. Justin, I want to say thank you on behalf of everyone here that joined us. We really appreciate your time. And everyone, I want to encourage you, take a moment and open up that email program on your computer. Open your Gmail or your Outlook or whatever you got, your Yahoo Mail, or if you were born in 1870, your AOL, and bang out an email to Justin and say, Justin, I'd like to hear more. Now, the recording will be available in a couple of days, but you don't need the recording of this webinar. Just reach out to Justin and say, what did you say on the webinar, Justin? And I encourage you to do it. And before the floodgates open and everybody else finds out about this and Justin doesn't have enough time to answer the new emails or whatever goes on, get in touch with Justin. I'm strongly encouraging you to do that.
Not that I'm any sort of celebrity, but on our website, if you go, there's a live chat button. Click it. I'm going to be sitting at my desk for probably the next 2 hours responding to emails and questions.
Yeah.
You can be one of them. Get your question answered tonight while it's fresh in your mind. I'll be here. I will. I want to help you, and want to find a way to work together. So come on the website, connect with me via live chat, connect with me via Skype, send me a text message, tell me what you need from the supermarket. I'll pick that up for you as well, and we'll help you save some pips.
All right, everybody. Have a great day or evening wherever you are. I'm Rob Booker on behalf of Justin Park from Forest Park FX. Thank you for being here, and we'll talk to you soon. Bye for now.
Thanks, Rob. Have a great night.